Welcome to a new video, and before we start into the content, I would like to say thank you to you that you are here, that you are interested in my content, because I recorded thousands of videos in German for the German audience, and my biggest dream since I was a child was and is to move to the United States and do English stuff, to record English videos, and now here we are. Thank you so much. I promise you will not regret it. So I would say, let's dive into the content. Maybe you remember my last video where I showed you what is the difference between high profitable traders and those who always try their whole life but never succeed. If you didn't see it, please check it out. Yeah, I gave you a list what is the difference between the highly profitable traders and those who always try. And today I want to use this video here to dive deeper in it, to bring you the understanding what we, the profitable traders, do differently to those who always try. I will break it completely down. My trade, what you saw in the title of the video, my over $4,500 in one day in only 60 minutes. What did I do? Yeah, so that you can use it for you and bring your trading to the next level. Or even if you are just a beginner, you will see what is important for you so that you can have the best start into your trading career. For me, it's important that I not only show you the results, so that I made 4.5K, wow. So for me, it's important that you take as much as possible out of this video. That means, what do I do when I start trading? How do I prepare myself for the trading day? This is so important because many traders, maybe yourself, you know the feeling that you always need to trade. Yeah, so you have the chart in front of you and you see everywhere, you see chances what you can do and you do it. And so you're not that successful that you want to be. So that's the reason you are not enough prepared for your trading. And that is what I want to show you, because when you are well prepared, your trading is so much more successful, and then it's much easier to make the money you want. And I have some secrets for you how I get more advantages in the market as the most people ever will have, okay? Let's dive into the charts that I can show what I mean. So welcome to my screen. Here you see the 15 minutes time frame, and the trade I want to show you, or the trades I want to show you, are from the 24th of June. At first, here's the performance. The software I use is our own volume trader terminal software. So as I mentioned, is that I built over the years a huge community in Germany, in the German speaking area, so that we have thousands of students and they all use this software. But I will show you everything you need so that you understand what we use and what I did, and what I every day what I do. What do you see here? You see, at first I didn't trade today, and then the last 7 days, this is my performance. You see there were no lost trades in it. What you see here, the little peaks, are always the fees I paid, and you see here it was $5,980 US, but this was from 2 days. In the last 7 days I traded 2 days, and what I want to show you is the Monday, this one here, and this was the day I want to talk about. This was $4.645 thousand. And how is that possible? What I already said to you was that you have to prepare yourself, that you are not lost in the market, so that you know, where do I wait for, what do I want to see, and then take action. And how can I do it? You see, this day when it started, it was here because this was the session before the market started. You see here the time in Germany, the market starts at 3:30, and what do I do? So I look for areas where the market shows me that the market doesn't want to go higher or lower. So I look for liquidity. Where does the market wants to go to grab the liquidity, and then what happens next? That is one very important thing I want to tell you here. We always have price zones, price level, where the big players like hedge funds and so on, institutional traders wants to go because they know there is a liquidity where they have to go to get into the market, get out of the market, and we have to look for these areas. So that means we are looking for supply and demand zones, for high and lows, for fair value gaps. But for your understanding, please apologize if my English is not that perfect. I try my best to explain everything for you as easy as possible. But yeah, I'm pretty sure the more videos I do in English, the better the videos get. But yeah, thank you that you are still here. As you see here, we have two different zones where the market likes to come, and then the market goes back to the range where it comes from. The price area in the middle of these zones are not interesting. That are, how to say, playing zones for those who doesn't know how to trade, or for the big players to accumulate their positions. So what you see here, I marked this one here, this box, and this here, and you can see every time when the market comes back to this area here, the market reacts, like here, here, and then here. But when we started the day, well, we just had this one here. This was 3:30. But then I would like to go in the future so that you see again how important these areas here are. This was yesterday. You see what happened? You see what happened here? So that was yesterday, and I marked this one, and you see today what happens. Just for you to see how important the preparation of your trading day is. When you prepare yourself good, your trading will be so much more successful because you don't take trades randomly. So, but let's get back to it. So we see this here, and that was my preparation. That was interesting for me because, okay, we were here. The zones that are interesting for me are in this area. What happens when the market comes up? What happens when the market, after market start, comes down? This is interesting, or this. And then, or now, we go deeper. And for my daily trading, I have a second chart or another kind of charts. This here is a candlestick chart. I think you already know it. But what I do, what I need, is a deeper view into the market. What happens in these candles? And for that I use the volume chart. You see, it's completely different. Yes, I know this is a 15-minute time frame. Yeah, I could take the 1 minute, 5 minute, or whatever I want. But here I have the 1 minute. So you see here I have every candle. On the left you see the color. But what I also have are numbers. And this is the volume. What is volume? Volume is the sum of all transactions that came into the market. All market transactions. Yeah, this is a much deeper view into the market because I can see where are the big players active. What do they want to do? Where do they stop the market? Where put they more volume into the market to push the market into the direction they want to go? We have different options how to visualize the volume. For example, here in the candle, so you have the candle, and this is on the timeline and price line. And then you have the option for the vertical volume here and here, or the horizontal volume here on this side. And yeah, that can help you to get a better, much deeper view into the markets, to have so much more advantages, as I will say 99% of all the people outside, out here. And there's one more thing I want to share with you. So what you have here is an order book, and what you see here are lines, and maybe you see it here on the right side. You have numbers, and you see what is here. This is the volume that was collected, hope this is correct, over a specific time. For example, here, current Thursday, current week, current Monday, current contract, current month, last month. These zones are so important, but nobody use it. And what you can see here, that the market always reacts exactly in these zones. Yeah, you see it here in the price line, but that is very important to know that this is not only on this price. Yeah, so when they accumulate volume, it's always in a little range, but this price then was the highest volume, and this, you see how important it is, but I will get back to it later. For you at first to see here what's important, this was market start. You see here the volume, yeah, you see it colored, and then what happened, the market came down. Oh my god, magic, exactly in this zone here, what I marked before, this one here. And then what I do is that I look what happened, what happens in this zone. This is important for you to know. So I don't take trades only because, okay, I have my zone here and now I enter the trade. No, that's not what I do. What I want is a confirmation that the market doesn't want to go lower or higher. Yeah, in this example, it's here to go lower. I want to see that they reject the price here, and you see they rejected. They came back, or they went up again, then they came back nearly to this zone, and then they pushed through this level here, through the opening price, and fired up this way here. So what I want to show you is a second chart, but then I get back to this chart just for you to get a better understanding what I mean with rejection. What you see here is still the volume. But what you also see is here the brown and the blue is how aggressive are the buyers and the sellers. When it's brown, you see that the sellers are more aggressive than the buyers. This here is a delta chart. What is delta? Delta is not the sum of the volume, like the volume chart. Delta is the difference between buyers and sellers. And then you see here how big are the sellers, how big, how aggressive are the buyers. And here what's interesting to see is that here the sellers, they were very aggressive. They tried to push the market through this level, but they were rejected. So the reason out of it was that the market tries to go up again, and then they came back. And what do you see here? Do you see this kind of aggression? You don't see it. What you see here is that the sellers are not aggressive anymore. And this is one very important thing for me to know. And now I prepare myself for a trade. But what I want to see is that the market goes through this very important level here. Look, let's get back to this chart here, where we had the volume from the opening. So when they get this, when they get through this level here, then I enter trade. This was a perfect example of a perfect trade to take the lowest risk you ever can take. What the most people do when they trade, oh my god, yeah, I have this zone here, oh, I enter a trade, I go long. Or when the market pushes through this level, oh, I go short. That's the worst you can do. Yeah, because you don't know what the markets or what the big players do. What is the plan? So maybe they go in this zone, okay, they get rejected, and they go up to get more power, and then they try a second one, and then you get your stop loss filled. But what I did is I wait. So one of the most important skills you need to have as a trader is patience. The market came back, the market came down. What I see, there are no more any aggressive sellers. That's perfect for me to know. I see here aggressive buyers. You see here's still more buying interest, and then I entered the trade. So I had, yeah, this stop. Okay, it was a little bit bigger, yeah, because I had this zone here. If this zone wouldn't exist, I would check if I can enter the trade here. That makes for me more sense because I have a lower, a better stop loss, and that means a better, how to say in English, chance to reward. That's in German, Chance-Risiko-Verhältnis. And then you see what happened here. This was my stop. But what did the market? This was my first target here, and you see what happened here. We had a little accumulation, we had volume. You see they collected more power for the next push. Here they collected more power for the next push. Here they collected more power, but you see here they need more power, they need more energy for this push here. And you see what happened at this level. You see they came up, you see the volume here, then you see volume here, you see volume here, you see volume here. And for me, what is important, I see this area here. Yeah, what we marked before in our preparation. So what is interesting, what is important for me, the same that we saw down here. Yeah, so I would never enter a trade just because only there is the zone what I need. Yeah, so when you see, if I would take this, yeah, I would get my stop loss filled. And yeah, but this is very important and interesting to see. You see here, so we have rejection, the market comes back, then the market tries to go up again. This zone here with 28,000 on volume was the level the market, the big players didn't want to get the market higher. Then the first rejection, the last try to push through this level. You see here, this was up 16 ticks, this was up 4 ticks, and this was only 1 tick. You see how the power changed, yeah, from push volume, also from up volume to low volume, from buyers to sellers. And let's check how this looked in the delta chart. What you see here, power, okay, power, they try to push. Here again, they tried to push, so that is a good, perfect rejection. They tried to get through this level, they didn't have the chance. Okay, so they came back, you see sellers are not enough. Okay, they came back to this level. Here we had power on the buyer side. We didn't have any more buyers, and then you see here there were only 3, then the market crashed. So, and let's show you my second trade. This one here was my first perfect trade. And what did I do? I waited for this here, but I took the trade much earlier. So because, yeah, you saw it in the delta chart, you see it here, rejection. You see the try, we had only the 4 ticks, we had only the 1 tick, we had the last volume here in this area. And then the market pulled down. So what I did, I entered the trade below this price here. Yeah, I waited for this. The market came up again, and then I took the chance. My stop was only here, it was 9 ticks, and my target was this zone here. Why? Because this is a very important zone, you see it here, and then you see what happened here. Yeah, here the first reaction, and here the rejection. Okay, that was a very good trade for me. This was a perfect trade for me. And what I could do and what you could do when you see this here, you could trade this back up in this zone. But I didn't do it because this was for me enough. This was for me as a professional trader. I did a good job, and that's important for a trader. You need to know when it's enough. 30 minutes to 60 minutes. For me, trading is freedom. Freedom means for me that I'm free, that I can do whatever I want, that I can use my free time for things I love. And I do so many things. I don't only like trading, I like to invest my money. I like to educate myself. So, and yeah, of course, spent a lot of time with my family. That was the reason why I started with this, yeah, because I wanted more time with my family. And so the question to you, do you want to change your job from one to another with the same amount of time you need for this job or not? If not, then trading is a perfect business for you, because when you're good, you spend 2 to 3 hours a day. Today, I spend only 30 to 60 minutes per day for my trading. Yeah, sometimes even less. And you see, I don't only like to talk about trading, I also like to talk about the things around trading, the mindset, the lifestyle, yeah, how to handle emotions and so on. That is what you will find on my YouTube channel. And thank you so much for watching, that you are still here in this video. Hopefully you like this video. Please leave a like to support this channel, subscribe for more videos, and Yeah, I think that's it. If you have any questions, if you want to see more or different things I spoke about but didn't get too deep in it, please leave a comment and let me know, and I will make this video for you. Okay, thank you so much for watching, and I'm happy to see you again.